These are the 5 most common mistakes people make when it comes to title. Number 1, ownership. How are you holding title? How are your clients holding title? Sadly, we still see properties going to probate every single month when this can be avoided. Now, if your homeowners are holding title as community property, tenants in common, or perhaps no vesting at all, it's definitely worth a conversation to discuss. When somebody passes away, their interest is separate from the other people remaining on title, and that interest alone will go to probate. Now, it's very common when someone comes on the title as joint tenants, you've got husband and wife, one passes away and they do not change the way they hold title, and that remaining joint tenant, when they pass, the property unfortunately ends up going to probate. Number 2, adding or removing someone to title. Before doing so, always contact your tax professional. The laws change from time to time, and it may trigger a reassessment. Now, this can be devastating for someone who purchased a property back when it was worth $400,000 and it's now worth over $800,000 today, and their taxes will go up dramatically. Number 3, liens. Sometimes the mistake is made that title does not show unsecured liens. What is an unsecured lien? An unsecured lien is a lien recorded on a homeowner's name, such as judgments, state liens, federal liens. Secured liens are liens that are recorded on the property, such as a deed of trust, a home equity line of credit, delinquent taxes, a list pendants, a mechanic's lien. So remember, we always check for both secured and unsecured liens. Number 4, uninsured deeds. This is when someone records a document that is not insured. Unfortunately, the homeowner will sometimes make a mistake that they have title insurance or coverage and are protected, when in fact, there was no title insurance involved because there was no real estate transaction or escrow. This is common when someone adds somebody to title or removes somebody onto title, and then shortly after they refi, cash out refinance, or perhaps sell a home, the title company will then ask for an uninsured deed affidavit, especially when they are selling their property and there are proceeds, they're doing a cash out, pulling money from a property. The uninsured deed affidavit will give the title company assurance that the person signed and executed that unrecorded document without duress. Number 5, statement of information. In every real estate transaction, it's critical that you get it turned in and filled out back to title in a timely manner, especially if you're in a transaction where the homeowner has a common name, so that we can clear those unsecured liens. If it's a common name such as Garcia, Lopez, Lee, Wynn, Smith, it's going to take more time. Do not leave it for the last minute. Get it to title up front so we can close in a smoothly, timely manner.